SpaceX lost about $2.5 billion last year from operations. And after reading the entire prospectus, I think that's the most interesting thing in it. The S-1 is public. Everyone is reading the same headline. So here's the plan. A quick 30-second intro on what an S-1 even is, then the parts that actually matter. And then the 3 questions that every SpaceX shareholder is asking me right now. The S-1, what's actually in it? An S-1 is the document a company has to file with the SEC before it can sell stock to the public. It's also the first time the real numbers are on the public record instead of a rumor. So the business, the financials, the risks, who owns what, all of it's in this thing. Companies usually file a private draft first, and then a public version when they are close. And here's the quirk worth knowing. The price and the exact share count often start blank and get filled later. So this is the real document with a few blanks the company will fill in soon. That is what we're looking at. So where are we in the process? Here's the whole sequence. In the lockup expiry, the date everyone wants sometime in late December. So plan against the dates that are solid, but hold that December date a little bit more loosely. That alone puts you ahead of most of the noise that's out there. Confirmed, reported, estimated. Know the difference. So there are 4 things in this document that stop me. So number 1, you are not holding a rocket company anymore. The financials were rebuilt to fold into xAI, the AI company SpaceX bought in February, and the X platform underneath it. So the thing behind your shares now is a rocket company, an AI lab, plus a social network combined. So same name on your shares, different company underneath them. 2, Starlink is quietly carrying the whole thing. The Starlink side threw off approximately $4.5 billion in operating profit last year. The AI side lost more than $6 billion and spent close to $13 billion building data centers, and another $7.5 billion just in the first quarter alone this year. So what you actually own is a wildly profitable satellite internet business funding one of the largest AI build-outs on Earth. 3, it spends like nothing you have seen. Total capital spending last year was around $20 billion. The cash balance fell from roughly $25 billion at the end of last year to under $16 billion by March. And there is now roughly $29 billion in debt on the books. If your picture was a company swimming in cash, the filing corrects you. The cash is real, and it's pointed at an enormous bet. 4, a competitor became a customer. This one is kind of fascinating because buried in the S-1, the AI company Anthropic agreed to pay SpaceX $1.25 billion a month for computing power through 2029. There's also a $60 billion option within the S-1 to buy the coding company Cursor. The AI pivot is not a slide in a deck. It is contracted revenue and signed options. This is a total addressable market of SpaceX broken down. 28.5 trillion is the number. That would be the largest actionable TAM in human history. 370 billion in space. 1.6 trillion would be from the connectivity of it. 26.5 trillion in AI. And this is the AI infrastructure company we keep alluding to. That's what it's transformed into. So that gives you the 28.5. That's the big bet on where the cash is being deployed, is towards that 26.5 trillion in the AI infrastructure. So it truly makes it a different company. And so to give you context on that, so it's 28 trillion is the US GDP. SpaceX claiming that its market opportunity is larger than the entire American economy. Even if it does do 1% of that TAM, its annual revenue would be 285 billion. So that is the company. So it's bigger, stranger, and far more of an AI story than the rocket company you signed up for. But there's a 5th thing in here, and this one is all about you. There was a 5-for-1 stock split this month. Every share count and every strike price in the filing is already adjusted for it, which means the numbers you memorized last quarter are not your numbers anymore. Your share count went up, your strike price came down. And the moment you realized that your own numbers just changed is the moment where you landed where 3 other shareholders landed after the S-1 was filed. So let me answer what they asked. 3 questions, the same 3 everyone is quietly asking. 1, how does the lockup and any early release actually work? The prospectus gives you the shape of it. The rules that actually govern who sells, when, and how an early release is run live in your equity plan documents and your company trading policy, not the S-1 alone. So pull your plan paperwork, that is where your real answer is. 2, how many shares do I sell and when? This is the one you fully control, and here's the calm way to do it. So while the money is still on paper, decide 4 things and write them down. How many shares? In what order, by tax law, in which tax year, since the timing alone moves your outcome, and against what cash you actually need. So selling is a choice, and it's never a scramble. There are no price targets on that list that are concrete. Everything is modeled. And one quiet detail from the filing. So shares bought through the company-directed share program are not under the same lockup restriction. So the belief that everything is frozen for 6 months is not quite the full picture. 3, how do I stay on the right side of the trading rules? Whether and when you are free to trade is a legal question that belongs with the Securities Counsel and your company compliance team. And if you're leaving the company, do not assume that settles it, because it does not always. My job is to make sure you understand how the rules work well before the window opens, so none of this is a surprise. MMPI is a legal call. Counsel and compliance early. So that is the filing, and that is what to do with it. Decide your plan while the money is still on paper and the pressure is low. Go to augustuswealth.com and rerun your numbers against the filing and map your strategy on the free calculators. No login, no email, just a clear place to think it through. This is educational. It is not personalized tax, investment, or legal advice. Your situation deserves its own look. Now go give it one.